Welcome back to Investing Talk Podcast.
Today, we're looking at a major player in enterprise technology and how it is rapidly transforming its business model, focusing heavily on networking and AI infrastructure.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. This company is making a really structural pivot. They're moving away from being seen primarily as, a cyclical server vendor.
Right, just selling boxes.
Exactly. And they're moving toward becoming this high-growth platform that's really centered on AI and hybrid cloud services.
That sounds like a massive change. I mean, what's the immediate evidence that this is actually working? That it's not just talk?
Well, we saw a pretty significant inflection point in their recent performance. They reported record quarterly revenue and record gross profit in Q4 of their last fiscal year.
Okay, a record quarter.
And maybe more importantly, management felt confident enough to actually raise their guidance for the next fiscal year for FY26.
Okay, let's unpack this a bit. When we look under the hood, where is that revenue growth actually coming from?
The standout performer has absolutely been networking. Orders here were up strong double digits year over year.
And a lot of that is being driven by the big acquisition they just made, right?
No, that's the core of it. The main driver of this future strength is the recent acquisition of a key networking competitor. It's a huge deal.
Right, the big acquisition. So what kind of impact is that expected to have on the top line? Because that's a huge integration challenge.
It's transformative. Analysts are projecting that the acquired networking business will contribute roughly $2 billion in revenue in the current year.
Just this year.
Yeah, in 2025. But that is expected to ramp significantly, potentially reaching $6 billion by 2026.
Wow.
So this implies massive inorganic and organic growth potential as they start to cross-sell.
And this is where it gets really interesting for me. They're positioning this whole combined networking portfolio, campus, data center security, all of it, as a modern, secure, AI-native stack. What does that actually mean for the market? AI-native networking.
It means differentiation. It's about making the network smart. We're seeing early signs of this AI-driven demand inflection.
So like the network manages itself.
In a way, yes. They're using AI models, like their MIST AI LLMs, for what's called AI ops. It automates troubleshooting, predicts problems. It creates a really high switching cost for customers.
I see. Because you're not just buying a router, you're buying into an entire intelligence system.
Exactly. And the numbers back it up. The Intelligent Edge segment, for example, is expected to rebound by about 21% in 2025, which is a really strong recovery after it declined last year.
Okay, so that's the networking piece. But beyond that, we have to look at their AI infrastructure and servers.
We do. That segment grew around 10% year over year in their last fiscal year.
But the number that truly grabbed my attention was the order book. How large is this future AI revenue pipeline?
It's substantial. The company signed $6.8 billion in new AI system orders just in their last fiscal year.
$6.8 billion in 1 year.
And when you look cumulatively, since Q1 of 23, that pipeline has reached $13.4 billion. That backlog provides a multi-year revenue stream. It's locked in.
So what does this tell us about the quality of the demand? Are they just relying on a few of the massive hyperscalers to place these huge orders?
And that's a crucial distinction here. More than 60% of those cumulative AI orders are actually coming from sovereign entities and enterprise bookings.
And not the big cloud providers.
A much smaller piece. This implies a more diversified, I'd say a higher quality demand base that is way less reliant on just a handful of giants.
Right. And they can dictate pricing.
Exactly. So this company is becoming a core enabler for hybrid and, sovereign AI deployments, which is a really key trend right now.
Let's pivot to the cloud model then. The hybrid cloud revenue grew 5% last fiscal year, and that reversed a contraction from before. That turnaround is largely because of their subscription offering, GreenLake.
Exactly. GreenLake is central to this whole thing. The shift to recurring revenue is what expands the margin potential and, the customer lifetime value.
So customers are essentially renting the tech instead of buying it outright.
Precisely. And they added approximately 7,000 new GreenLake customers in the last year alone. Their total customer count is now about 46,000.
That's impressive customer growth.
Yeah.
And how fast is their total annualized recurring revenue, their ARR, growing?
Total company ARR hit around $3.2 billion,
Wow.
which is a massive 62% increase year over year, and that includes the acquired networking business, so you can see the synergy already.
So they're layering a software and services moat on top of their hardware.
Mm.
I'm thinking of things like Morpheus and their private cloud AI services.
That's the whole play. It builds a much stickier, higher margin business model.
Okay, so we've heard a lot of positive catalysts. But, no stories without risk. We saw headlines recently saying the stock dropped even though they beat earnings.
Yeah.
There was some skepticism that AI is not paying off yet.
Yeah, and that raises an important question. When will these AI orders actually convert into profit? I mean, the real profit.
Right.
The risk is that the revenue conversion might be slower, or maybe it comes at lower margins than people expect, which would prolong the current net loss they're reporting on a TTM basis.
So what's the bullish counterargument to that margin pressure?
Well, you have to see it as a transition period. First, that $13.4 billion backlog provides a huge buffer. That revenue is coming.
It's just a matter of when.
Right. Second, management is very focused on execution and cost discipline. They're even using AI internally to improve their own cost structure. And third, as the mix shifts structurally toward higher margin networking and ARR from GreenLake, the overall margins should just naturally expand.
The other big risk has to be integration,
Yeah.
right? Merging a company that large is incredibly complex. What if the synergies don't show up or just takes too long?
That's a totally valid concern. You have culture, product overlap, sales alignment. It's a lot.
So what's the evidence it's working?
The fact that the networking segment was already a standout performer with that strong order growth during the early integration phase, that suggests management is handling the process really effectively so far.
Okay, so connecting this to the bigger picture, where does the stock stand now versus its, potential value?
Well, the stock currently trades around $22 versus an estimated intrinsic value of about $26.50.
So there's decent upside?
It implies there is significant upside potential, maybe 16 to 20% if this growth path holds. Current levels are being treated as like a value support zone for people accumulating shares.
So what does this all mean? The whole narrative is shifting away from, cyclical player to a real structural growth story in AI infrastructure and networking.
It is. The market is constructive, but it's still cautious. It's waiting for that definitive proof of margin expansion, which, could suggest a possible contrarian entry point right now.
And the time frame for this opportunity.
This really looks like a multi-year hold, probably 2 to 4 years. But there could be some tactical upside heading into the next earnings report in late February or early March.
Because that's when the market will want to see proof of those synergies and the AI revenue conversion.
That's the first big test.
So this raises an important question for you to consider. As investors look beyond the massive hyperscalers, will this company become the picks and shovels leader for the decentralized, sovereign, and hybrid AI build-out? Thanks for tuning into the show. Make sure you subscribe so you don't miss our next analysis.